Anglo American slipped into the red. The diversified miner has posted an annual loss of just over $3 billion after taking a near $4 billion impairment. That largely related to its ailing diamond unit De Beers amid weak market conditions. CEO Duncan Wanblad says work to separate that division is well underway, with action taken to strengthen cash flow in the near term and position De Beers for long-term success. Anglo's trimmed its dividend by a third. Goldfields has posted a 36% rise in annual normalized profit. That's thanks to an improved operational and financial performance in the second half. A final dividend of 7 Rand per share has been declared. This takes the total payout to 10 Rand. That's an increase of 10%. Resilient, that's how Mondi's described its year-end performance. The paper and packaging groups posted a 1% rise in revenue from continuing operations and a 53% slump in earnings per share. Mondi says that trading conditions were difficult. It cited soft demand and a challenging pricing environment. Adcock Ingram has posted lower half-year profit. The pharmaceutical groups reported a 9% drop in headline earnings per share. Adcock says its performance was affected by constrained consumer spending within the lower LSMs and reduced inventory holdings in the pharmaceutical wholesale channel. An interim dividend of 115 cents has been declared. That's 8% lower than the prior period. Tiger Brand says it's building on the positive momentum achieved in the second half of 2024 and has delivered strong operational results for the first 4 months of its financial year. Revenue for the period registered growth of 3%, with Barloworld citing both volume and price inflation. It's added that the consumer environment is beginning to reflect early stages of recovery and that volume growth was achieved across the majority of business units. Barloworld's managed to eke out revenue growth. The industrial group says its top line for the first 4 months of 2025 rose by 1%. That's despite what it's described as a compressed Southern African trading environment. Barloworld says that was absorbed by the expansionary environment in Mongolia, which continues to grow, driven by the government-led expansion of transport infrastructure and external demand for its minerals and resources. Further afield, Microsoft unveiled a new chip and said it showed quantum computing is years, not decades away, joining Google and IBM in predicting that a fundamental change in computing technology is much closer than recently believed. Here's more detail in this report.
Microsoft says it has created a new chip that shows quantum computing is much closer than recently believed. Quantum computers hold the promise of carrying out calculations that would take today's systems millions of years. But the fundamental building block of quantum computers, called a qubit, is extremely difficult to control and prone to errors. Microsoft says its Majorana 1 chip is less prone to those errors than rivals, providing as proof a scientific paper set to be published in academic journal Nature. The chip has been in the works for nearly 2 decades and has a new type of material. This is Microsoft's Chetan Nayak in a video provided by the company.
It's called a topological superconductor, or topoconductor for short. And this is something that people have hypothesized for decades. But no one had really reliably created this in the laboratory or been able to harness it for quantum information processing.
Google last year showed off its own new quantum chip, saying that commercial applications are only 5 years away. IBM said large-scale quantum computers will be online by 2033. Microsoft did not give a timeline for when its chip would be scaled up to quantum computers that can outpace today's machines, but in a blog post, the company said it would be, quote, years, not decades.
And Manchester United reported an adjusted net loss of $7.80 million in the second quarter, hurt by lower revenue as the club played the less lucrative Europa instead of the Champions League competition this season. Let's take a look.
Manchester United's problems show no sign of easing, on or off the pitch. The English Premier League soccer giant on Wednesday reported a net loss of $7.8 million in the second quarter. That was due to lower earnings from not participating in the more profitable Champions League, the top-tier European competition. Club CEO Omar Barada said in a statement on Wednesday, quote, "We recognize the challenges in improving our men's team's league position, and we are all working hard collectively to achieve that." The club currently sits 15th in the Premier League table, only 3 places away from the relegation zone.
My focus is to prepare the game.
In November, United switched managers in a bid to turn performances around, appointing Portugal's Ruben Amorim. But results have seen no improvement. The club's revenue for the quarter ending December 31st fell 12% to around $250 million. That resulted in a net loss compared to a profit of about $24 million a year earlier. Even so, United expects annual profit to hit the top of its forecast range at around $200 million and is keeping its full-year revenue forecast unchanged